Well, guys, it doesn't get any bigger than this. The two largest economies of the world are currently in trade negotiations. But will it break up or break down this week? And what does it mean for us as traders and investors? As markets stay in sideways areas, we know that there are certain things that are going on underneath the hood. But could it be the crypto markets that are showing us the way, with huge breakouts in Bitcoin, Ethereum, and many others over the last 24 hours? And are there other opportunities for us, even if those ones have gone past their levels of buy? Well, in today's video, we're taking a look at stocks, commodities, and cryptos to break it all down together. And boy, oh boy, there are a lot of things happening this week, including the latest inflation numbers. Join us, guys. This one is not to be missed. Well, welcome back, everybody, to The Daily Show. My name's Tom, and it's great to have you here in what is going to be one of the biggest weeks we've seen in 2025. What just happened on semiconductors? Are there opportunities in the markets right now? And why are we seeing so much volatility? Well, it comes off as we are now in negotiations. Yes, we've seen both the US and China enter potential negotiations for, of course, these large tariffs over the weekend. And I'm sure this will be updated. And of course, we'll be posting over on our X account, links in the description down below if you're interested, as we get more news around this. But at this particular point, Trump just announced that he believes we are getting a total reset negotiated in a friendly but constructive manner with China. And we want to see, for the good of both China and the US, an opening up of China to American businesses, great progress being made. Now, this had a little bit of an impact on the weekend Wall Street futures, bumping them up here 0.4%. But as we've seen over the last 24 hours, some crypto markets are going absolutely ballistic. More on that later on in today's video, but let's have a look at where we've just been. First up, we've just had a 13% increase in the past month. And thanks to Subu Trade here, you can see that we have some stats on what tends to happen next. The good news for bulls, everything that we're currently seeing in terms of this recovery doesn't seem to be overall bearish. And that means that even if we do get pullbacks now, it's likely that Wall Street will be looking, at least initially, at buying the dip. And there are reasons behind that, because actually it looks like they've missed this current rip so far. Could it be a repeat of 2020, or do they know something we don't just yet? Well, as it turns out, according to all these data stats, and we've got quite a few of them, 67% of the time we're bullish 1 month later. But as you can see, some pullbacks have been large in the previous stats. So let's take a look at what all of this means when we break down the sector valuations. Now, as you guys know, we were getting towards 100th percentile when it came to really, really expensive markets ranked on their 10-year and even 30-year history. And you'll notice here that there are some cheap sectors in the markets, notably things like healthcare, which is currently under tariff concerns, and of course, energy, which has been cheap for years. Current PE ratio, 14, which is of course quite low. But the one that you're always looking at is this one up here, information technology, which tends to drive everything in the US economy. And as you guys know, if we see anything to do with technology starting to pick up, which it has been, particularly semiconductors, and that starts to drive the bull market run, that is a great sign that we've got huge structure and we potentially have a movement to all-time highs as a thing that could happen. Now, that doesn't mean we won't get a pullback, and we'll talk more about that later on. But after the VIX falls for 5 straight weeks, with its total decline exceeding over -10, you can see here that, again, it's a decent sign that the lows are in. But it also shows you that the next week, being the one we're coming up on right now, is only up 40% of the time. So if we're going to see declines, you would have to expect them to occur over the next coming weeks. Some concerns for this particular week that we just saw was, of course, around yields. The Federal Reserve effectively came out and said, we're not doing anything. We're going to follow the data, which means being late. And you have to look at the US government, and pretty much that's now the read that we need to check out. Remember, if these yields go too ballistic, we do have the plunge protection team potentially coming back. And the key level to watch is 4.95 on the US 30-year. That's the one that we've had set alerts for, and we know that's where they last did some blinking, and of course, we saw some major announcements. Now, why are we saying that potentially this rally could be false for now, and there may be some pullbacks? Well, a lot of it has to do with consecutive weeks that we're seeing everybody on retail side and even sophisticated investors claiming they're bearish 11 straight weeks in a row at over 50%, like unheard of numbers. But at the same time, every retail person under the sun has been purchasing in. So it's like they say they're not buying, but then they're still conditioned to buy the dip. Yes, all of us seem to be buying the dip, which is fine. There were a lot of statistics that we shared in only a few weeks ago where we talked about how statistically it was an amazing zone. Percentage of stocks above the 200-day moving average, and of course the supports, the demands, all of those other kinds of things. But now that we've reached this crescendo, which is the largest ever recorded, 21 consecutive weeks, the longest streak ever, according to Bank of America, of retail purchasing, could there be a shakeout? Well, hedge funds are on the wrong side. Institutions continue to sell this rally, which we are seeing in some dark pool liquidity, and retail continues to go all in. JP Morgan just said that the month of April was the biggest month ever recorded in terms of retail inflows. But the stats kind of point towards retail being correct. When we see sell-offs such as we have had, and we see pickups such as we have had as well, which is over 50% of the retracement occurring, generally speaking, when you take a look at the next couple of months, markets have often recovered. And of course, if Trump is going to do deals or even reduce tariffs, potentially the US economy being so strong coming into these tariffs may be able to at least support for some time a potential growth. Remember though how tariffs always work. They do front load demand. So what that means is that you tend to see this huge spike up in economic activity as everybody goes ballistic purchasing in to great gain as much as 3 to 6 months worth of inventory. Then the consumer comes in and buys that, panic buying, which we've already seen in those used car detail numbers that we put in our previous video. And that's already spiking up. So it clearly shows that this is occurring. And then, of course, for around 3 to 6 months, it's kind of like the calm before the storm. And then ultimately, of course, it leads into supply and demand shocks. Basically, demand starts to fall off as prices go up, and then we get deflation and we potentially get a recession. But are we still following this path here? This is one of the tech boom paths which had a massive sell-off in it, similar to the 1998 sell-off, which we'll talk about in a moment over here. And you can see here we've recovered so far. Are we going into the melt-up phase? This was a V-shaped recovery versus the 98 narrative, which is the most likely one we're on right now, which actually had a dipping process and then saw a rally after that particular point, making an all-time high, but ultimately being near the end of the cycle, near the end of the run. Of course, all of these things would make sense when you consider them. It also makes sense that we probably have seen enough now to say, well, the market at least is putting forward what would look like a proper recovery. Tech is riding high. Semiconductors have broken out of their downward trends in some aspects, although Nvidia still hasn't started leading. And of course, we have that all-important SMH chart versus SPY, which is semiconductors versus SPY, breaking out the downward trend. This is a good first sign, along with the Zweig, Brett Thrust, and other things, that we are still in that recovery. And this is, of course, the current thought process. We are currently trading at exactly this point, which is very, very similar to the 1998 narrative. Are we about to see a sell-off? I think a lot of this comes down to whether we see a proper deal between China and the US. And although I'm a little bit of a skeptic that a proper deal will be done based on the UK deal being not really anything in particular, you never know. So, of course, we have to be on the lookout for each one. Do you think a deal is going to be done this weekend? Let us know in the comments down below. Some other interesting things that have started happening is everybody's gone negative on the dollar. And we already knew this because news was incredibly negative. Now, we've had a negative run on the dollar this year. We've actually been negative on it since January together. However, it does look like that is starting to turn. We've seen an inverse head and shoulders that we'll look at later on in today's video. And of course, we've also seen some very strong signs of markets being basically too heavily bearish. Now, whenever this has happened, we've seen usually bottoming processes or even some recovery processes start to play out. So when they've turned really, really bearish and we've seen price action kind of go in the positive side, it has been a decent sign. Any updates on dark pools? Not really. We still trade around the zones that we've seen a lot of TQQs being closed, potentially QLDs here, which is the 2 times triple Q. These types of market indicators have come through all around this zone, but we don't have too many coming in over the last 3 to 4 days. Could it be that inflation number this week may actually show up these dark pools? We're looking for them, guys. We still don't have those triggers for further selling, or at least what we think are selling large positions. Swag breadth thrust update, just so you guys know, whenever we've seen this, which was now 2.5 weeks ago, it has been a very bullish statistic since the 1950s. Obviously, we've used it on the channel several times back in 2023 to be very bullish on markets. And of course, right now, yes, it technically does have a very good track record with it. But do remember, the last time we had tariffs, that was the only time it failed. So that's something to keep in mind. Before we go through earnings for this week, which there are quite a few big ones, especially from China, I wanted to mention Google, because Google got hit this week on news that there is an Apple AI kind of search engine coming to all iPhones that will, of course, probably be default. But take a look here at the current valuations. I thought it was interesting to see that Google is currently trading at around 16 forward earnings, and that traditionally it's been trading somewhere around that 23 kind of forward earnings when you're looking at a 5-year and 10-year history. Now, I did a bit of a write-up on this over on X if you're interested, and it has some of the good and the bad case scenarios. And obviously, antitrust lawsuits are the big negatives here. And of course, Google search being so much of the revenue and potentially declining. But boy, oh boy, does it look like Google is starting to get cheap on certain statistics. And as you'll see, it's not like the earnings overall are dwindling, such as something like Apple. They're actually going up. Is that one of your favorite stocks in the markets right now? Also interested to know your opinions based on this week's sell-off. So as we mentioned, there are quite a few Chinese stocks coming through this week. JD, SE, which is obviously an Asian stock here. And then we've got the big one, Barber, on Thursday. So people will be watching these. Do remember the options flow is important. And more importantly, the options expectations. Some of these stocks are expected to move plus minus 10%, which is going to be huge. And Barber is plus minus 8. John Deere as well coming through later on this week with a plus minus 6.5, which is going to be interesting indeed. And I thought I'd just update gold-silver ratio. We've seen gold stabilize, silver stabilize since the last video, even though the dollar has been going strong. And just remember, yeah, silver is technically historically cheap to gold, and though gold has gotten all of the press this year, and look, rightfully so. We do love gold on the channel, and it started to pick back up, 3,600. Let's hope we get there. Obviously, that was our October target, but it almost got there earlier in the year. Now, let's have a look here at the S&P 500. Liquidity was injected by the Fed last week, but I'm not sure I'm going to call it QE yet or anything like that. I know that's been kind of going around. Still updating as we get more information on liquidity, but a small uptick over the last week, which is good, but still declining against where it was only a few weeks ago near those lows. We've also seen the S&P, as you can see here, stay in a tight range. So a lot of people in the previous comments were saying, look at that, it's going mega bullish since you've been talking about it potentially being bearish. Guys, it's literally the exact same zone. Nothing's changed. You've got to remember, this was where we first saw our largest dark pool. We saw a few around here as well. And realistically, that's all we've had so far. So we've got a couple of large transactions literally trading at exactly the same price we're currently at. Now, the NASDAQ will be the key one because, of course, it's all about that daily 200 moving average. Remember, when the NASDAQ leads and the technology and semiconductors lead, that's a great sign for markets. Currently, as you'll see later on today's video, the 200 daily is currently resistance. In fact, actually, let's have a look at it right now together. Let's just quickly click on this one. Here is the 200 daily, and you can see that even on the previous video, we talked about this being a doji. It rejected it once again. Could it be that some US-China reduction in tariffs or some type of deal could push this through? It certainly could. But just remember, this is the major market area of inflection. And why we say that is because if you go back through and you look at 2022, or you even look at 2018, and even other periods in time, what you'll often notice, okay, 2020 just absolutely blitzed it, but just found a little bit of consolidation. But when you go through here, have a look. Comes down, retests it, bang, straight down. Consolidates, breaks through, pulls back under. Generally, it gives you another opportunity as well around this 200. So I don't think there needs to be too much FOMO. This is the chart that we're watching most closely this week. Another one will be the US 500 from the perspective of 55.75. It's currently in a series of higher highs and higher lows overall. So we can't say that there are bears in control, but we do know where the big level is. And the reason why we know it's here is because of the reaction we saw last week around the Fed announcement. and of course the trap that was set on the NASDAQ itself, setting off quite a few day trades and squeezes. Currently, the market, though, overall in a series of higher highs and higher lows. So if you are looking at shorting this zone, even though, yes, it is overbought on many metrics, you're kind of going against the trend. So you've got to make sure you do it with risk management. Options, other things could be possibilities. Let's have a look at the S&P now from this week's options flow. We do know where the positive gamma comes in, 5,700. We also know that puts are still around as of the Monday trade, which of course sit at literally current price, 56.50. So we're kind of stuck between a 50-point range at this point. And if we move to the downside, we could start to create waterfall or cascade effect. And if we move to the upside, we obviously could have that positive gamma starting to take control and a squeeze reoccurring. What about for stocks? Well, it seems to be across the board. We saw Tesla come up to the 300 area. And we've talked about this so many times. 300, 300, 300. We break 300, positive gamma, and of course, flows starting to come back in. A massive level 300 opens up 330, exposes serious upside potential there for Tesla. Remember, it's not based on your opinions. It's just based on the price action, the flows. Don't look too much at valuations. That'll often set you wrong on that stock. Let's have a look at Nvidia then. 120. We know we're trading between 115 and 120, and we haven't seen a breakout of, I guess, the king or queen of semiconductors. And because we haven't had that breakout yet, then of course we can't really make any major calls on whether semiconductors truly have broken to the upside. Only looking here at things like semiconductor SPY is the key one. We've got that up later on. That certainly looks a lot better than it did. Just an update, US 30-year, watch the 4.95 zone, and obviously also look at junk bonds to see what they've been doing. At the moment, they're recovered and stabilizing, but if they start to drop off, that could be a concern. When we're looking at junk spreads, we can see here they're on the decline. That's an upside for the markets. Remember, we started to see this back over here in April, early April, April the 8th and stuff, that markets were actually starting to already form base based on this. It's one of our best reads that we've been using. And so far, it actually still continues to say risk on. Even the little spike ups have been very minimal. Now, if this goes ballistic to the upside and stocks start to drop off, that's certainly a major concern. But for now, yeah, I would say the bonds market is stabilized at this point. US dollar, as we can see here, it broke out past the resistance and opens up potential squeeze to a 102.50 area. Certainly looks like dollars risk on again in terms of people are starting to look towards the bull side. And that also managed to close above that all-important daily 20. So that's the first break above the daily 20 we've seen for a lot of points. So that's kind of important there. Let's put pressure on gold. Gold's come off the 61.8 golden fib and the 20 daily moving average, which is obviously where you would expect some form of buyer to come through. We mentioned this in our previous video. And if you see here on the smaller time frames, you can see it's actually put in a little higher high, which is also a good sign, starting to, potentially start to see like some bids that are coming through. Maybe we see some type of action like that this week. Could it go against the dollar, even if the dollar's bulling? Yeah, gold can do that. Silver also holding, stabilizing. 33 is the main level we're looking at this week to break through. Can we get back to the 33.50s, 34s though? Silver really needs to break 34, 34.50 in the future. US oil also recovering here, as you can see, breaking through. While I'm not a trader of oil this year, you can see here it has stabilized underneath that 60 a barrel zone. And it does look like there's a little bit of risk on the oil trade so far. Tesla 300, we know what that is. Didn't manage to hold above 300 plus. You can see here it instantly rejected off. That's because this is a massive call wall. We close above 330, certainly a very big possibility there from at least the flow perspective. Nvidia still trapped between the resistance zone, so no updates on that one. And I guess we'll just update here semiconductor versus SPY, because this is probably the key chart that most investors are looking at, which is that we've started to see some super recovery. 0.4 is the major ratio to break through. But the best thing is we've actually broken the downtrend so far. So we've got that downtrend out of the way. We're looking at the 0.4. We make it above this, it should signal that pullbacks are going to be met by bull demand. This is a very important chart because we've already seen that really the US market has been weakening for a while, and specifically weakened heavily, remember, in February. And that was before we got all those other crazy sell-offs that continued in the market. So semiconductors are important. They started to weaken in June. We saw a recovery in other areas of the markets as we kind of went more mid-cycle, banks, etc. And now we're starting to see semis lead again, but they're back to that dreaded weekly 20 moving average. So very important week for them, inflation particularly. Now, what about Google? Well, Google got hit on the AI news from Apple, but I think we need to remember that a lot of phones in the world are droids as well. And Google has some pretty good fundamentals when you look at it. Now, the market's, of course, starting to price all risks into it. But what do you guys think? Do you think this stock is cheap? Do you think it's expensive? Do you think it's got good price action? I don't mind it at these levels. And I think when you look at the weekly, you can see from the technical perspective why that might be. Fill the gap, hold the zone, obviously 2050 cross on the weekly, obviously resistance is up here at 170. Earnings was pretty good. And of course, I think in the world of chaos that we kind of live in right now, people are searching on the internet more than ever. Google search, YouTube search, other platform stuff, more online cloud, more security. These types of things are starting to play out. And we're seeing that narrative, of course, change a little bit. Semiconductors versus SPY, as we mentioned. And then, of course, there are the Chinese markets. Big earnings this week. They're just kind of slowly grinding up. We do remain bullish on our 12-month forecast for, of course, China, based on the macro we've talked about. But for now, it's kind of at resistance, as I've written here. So we're still trading around the same zone. US 2K still trading around resistance, still technically overbought right now, but no signs of structural failure yet. So, of course, still up. And then there's the NASDAQ, which, as we mentioned on the small time frames, had the steal last week. And so far, we've managed a lower high, not a higher high. So we'll see whether we get a higher high on Monday after maybe Trump and China and stuff, that we get a deal or something going on there. That could push us through 20,200. And the resistance points to watch at 20,350 and 20,600 this week. They're the two major points if we break to the upside. And obviously on the down, we're looking at underneath 19.6. Underneath 19.6, that's going to be a pretty big deal. When it comes to crypto markets, though, it's been risk on, risk on, risk on. Ethereum smashing into our most likely next zone, 25.50. Wow, big moves there on Ethereum. If you have a look at Solana as well, we'll load up here just for a minute. You can see it's risk on across the board. And a lot of these cryptos have really changed trends. So we already saw this from Solana a little while ago. It's been consolidating, and then it had this really nice breakout. And they've all hit these first resistance levels. Could Solana be going, though, for 200? A lot of people are going to have that on the chart. So breakthrough 180, 182, then potentially 200. Bitcoin's kind of similar, except I think with Bitcoin, we're at the resistance. So as I mentioned at the start of today's video, this is still the resistance that we mentioned in the previous one, and we're looking for a big weekly close. We get a close above 105, 106. Wow, that could open up, some serious movement. Could we get 125 pretty quickly? Certainly anything's possible in Bitcoin. And as a lot of people do mention, Bitcoin's asset valuation is still well under gold across the board. And although you're not going to price them exactly, you could say, well, is it possible for Bitcoin to potentially double? Even at these numbers, it's possible. But of course, our numbers were sitting around 125 to 150 before any of this stuff happened. So certainly some movement into alt assets does seem to be popular right now. Let's move over to the big news of the week. Inflation, inflation, inflation. Tuesday, 8:30 a.m., the core CPI and CPI numbers. Do we see any tariff information coming in here? Certainly interesting. Expected to see some inflation. So that'll be a number that moves around markets. And then, of course, as we go through, got some other major currencies and things going on. Then we got PPI and retail sales on Thursday. And then Fed Chair Powell speaking straight after those. So he's just managed to get himself stuck right after these numbers, hey? Wonder why that could be. Certainly one to watch, guys. Old Powell coming out on Thursday, straight after that PPI retail sales. And then the Fed's favorite number, the prelim UOM, on Friday as well. Thank you so much for watching. We hope you enjoyed today's video. Have a great weekend, and obviously stay tuned for all the news coming out of Geneva. I'm sure there'll be many other announcements. Will they ultimately be kind of a boom into a bust? It really depends on the deal, and obviously we'll be updating over on X. So make sure to follow there. Thank you so much. We'll see you in the next one. Bye, guys.